Okay, folks, welcome to Best Stock Charts for the coming week. It is Sunday, the 17th of July. This is Bob Desmond over at the Contrarian Trader, and let's get to it. Over the weekend, we have a lot of news coming out of Turkey. There was a failed coup attempt on Friday evening, and that coup attempt was put down. What effect that's going to have on the market, I think it's going to be very, very little. But I think what it could do is help spike the precious metal names a bit. They were up after hours on the news, so our positions in the commodity space, I think, should do well in the coming week, at least on Monday, Tuesday. So I'm going to roll into the market pulse check with members, along with a review of our current holdings with members immediately following Best Stock Charts. And we'll discuss our strategy for the coming week. So let's begin with a discussion of the stocks that we're watching as we proceed into the coming week. The first couple of stocks that I have up, they are short-term swing trades. First one up is SPU, Sky People Fruit Juice. Never heard of it. RSI at current is 91.36, extremely overbought. You can see that the uptrend that we have here is unsustainable. We are leaning into the third standard deviation Bollinger Band, not even leaning into. We have pierced it and are trading above it. So this is a parabolic move higher that is going to need to be remedied. Do I believe that SPU is going to collapse and go back down into its prior base? No, of course not. What we're going to look to do is to skim the froth off of this overbought condition, book our profits, move to the sidelines, and in all probability, this trend will begin to resume at some point in time in the future, but expect it to take a rest fairly soon. If you take a look at a weekly chart, or actually a monthly chart, I always teach members, you always want to use multi-period charts. What does that mean? You want to use daily charts, weekly charts, intraday charts, etc. in tandem so that you understand how a stock looks from a higher level view when you're using the monthly and weekly charts. So you could see that for the longest time, we were in a downtrend on SPU. That is now beginning to change. However, while we've seen a nice rally the past couple of weeks, we hit stiff resistance last week. So going back to the daily chart really quick, now that we've done our research, we understand where there are sellers, aka overhead supply. Then we take a look at the daily chart and we say, okay, we can expect that we should see sellers fairly soon. And what I'll be doing with members is going into the intraday charts using the 2-hour and 30-minute charts to identify divergences, intraday divergences, which are implying that we're seeing some profit takers move in, and those divergences won't appear on the daily charts for a day or so. So we'll look for those opportunities and we'll begin to build a position to the short side on SPU. Next chart up, NTDOY, Nintendo Corp. Everybody knows all about this stock right now. So we have RSI at 87.60. Do I believe that the shares can move higher? Yes, I do. Are they very, very overbought? Yes, they are. But that does not mean that the shares are going to collapse on Monday morning. I would prefer to see the shares spike up higher with RSI above 90. And as I just mentioned with SPU, we want to take a look at our monthly charts, weekly charts to identify where there is historic resistance. So we closed right at historical resistance last week. Does that mean that it's going to be a definite resistance level for us in the coming week? Not at all. This is an unusual fad that's really once a decade type stuff that is out there. And there's huge news behind this Pokemon craze, both negative and positive. So there will be some negative news that comes out. Probably the first lawsuit that you hear about people walking across the street getting hit by a car, they'll blame the company. And that may act as a catalyst to send the shares down a couple of points. And we'll look to scalp a trade. I think longer term, the shares are going to move higher. But again, what we're looking to do, going back to the daily chart, we're looking to scalp a swing trade profit to the short side, perhaps on a filling of the gap down at $30.50 per share. So members, more to come. Volume is still outstanding. So we don't want to fight these guys. The shares can still move higher, despite the RSI being at 87. This symbol here is AVGR. A fellow member, Anthony, he's a gold member, asked that I do a review of this symbol, an extreme oversold trade. It is on my screener. I would have done it anyway, but good for you, Anthony. You picked it up. He happens to like the extreme trades, SPU and NTDOY, which I just went over, are extreme trades. So let's discuss AVGR. So we are leaning into the third standard deviation Bollinger Band, which frankly means you're not supposed to be down this far. Does that mean it's going to rally purely based on the fact that we're leaning into the third standard deviation Bollinger Band? No. It could trade sideways and then break down once again. What you want to use is your RSI in tandem with the Bollinger Bands, along with the declining volume bars, which is still well above average. Stokes still have some backing and filling to do here. So I don't think the selling is done yet. And to be frank, Anthony, the chart showing RSI 19.23 barely makes it onto our screener. So I think that these shares can move significantly lower, so much so that we are near the $5 price point. And when shares go below $5 in price, it's not unusual to see RSI below 10. So, do I think that the shares are probably going to continue lower? Yes, I do. Now, the problem with AVGR is this, is that while I went over the monthly charts with the prior two extreme trades, AVGR, there is no historical support below. So what we're relying upon is the daily chart in conjunction with, let's use the 2-hour chart. Now, the 2-hour chart has RSI 16.57. You could see that we had a nice rally into the close. Might we see a spike higher on Monday morning? Sure, I wouldn't be a bit surprised to see it. Do I believe that we're going to have a huge rally? No, I don't. I think that they will fade the rally. The shares will roll back over once again and proceed lower. That's not a guarantee. It's just a probability. And that's all we deal with here are probabilities. There are no guarantees. Now, the ideal scenario is that we break down on the daily chart further, see RSI below 10, then I will be extremely interested in the shares as a potential long trade. So AVGR, we'll keep an eye on. And while I'm bearish on it, would I be shocked to see a rally tomorrow morning? Sure. I wouldn't be a bit surprised to see that happen. Do I think that it will fail? Absolutely. Where will there be resistance? Right about here, $7.25. You'll hit resistance because we know from this price action, these topping tails, there are sellers above there. They're looking to get made whole. They want their money back, and they will sell the shares. So, members, more to come on AVGR. Okay, bank stocks up. I am very bullish. I have been for a while now on the housing plays. BKMU is a bank. I am not bullish on the regional or the money center banks. I am more bullish on the mortgage banks like BKMU. They have a lot of exposure to the mortgage business, and they're very, very well run. It's an IBD darling. So this is a weekly chart. You could see that we are in a bull flag formation, and we are leaning into the upper band of resistance. I am looking for a breakout. And on that breakout, we will be looking to open up a position on BKMU to the long side. And I wouldn't even consider this a swing trade. I think that we can get a several month move out of BKMU. So let's just call it a position trade. RSI, no breakout yet. Volume last week rose. We haven't seen volume this high to the upside since January. So very, very good price action last week. Very, very good volume action. Exactly what you want to see. But we need to look for the breakout on a weekly basis before we get long of BKMU, and we will buy on strength. What does that mean? Well, we'll open up a position on a breakout above this upper band of resistance. We'll add more on a breakout above $8.25. We'll add more on a breakout above $8.44. That marks the all-time high. We want to buy on strength, not on weakness. Next chart up. LGI Homes. As I just mentioned with BKMU, I'm bullish on the housing plays. Now, LGIH is a investor's business darling stock. It is their number one pick in the home building space. Now, on Thursday, it had a very, very weak day. Friday, it consolidated. And I'm really not all that interested per se in the daily chart, with the exception of we want to take a look at where we've been. We broke out of this triangle formation back in June. We pulled back, we retested it. So we continue to make higher highs and higher lows. Good stuff. How is volume? Volume to the upside has been dropping off. So I'm not ready just yet to go jumping in and buying LGIH, especially when you take a look at the weekly chart, where we are leaning into the upper band of resistance in this uptrend channel. Now, what I'll be looking for is a pullback on LGIH, and then we'll look to buy shares on a bull flag formation. But right now, it's a watch stock only, and it's really questionable as to whether or not we'll even get long next week. It may take 2 weeks of us watching the shares before we decide that, okay, it's now time to get long. But I do like the sector. I do think that it's going to move higher. Next stock up is Lumber Liquidators. Again, giving us exposure to the home building space. Now, last week, we flashed a bearish key reversal on the week. We got a little bit extended. I've been speaking about Lumber Liquidators for several weeks now. We had broken out, pulled back, retested, and we rallied. So they sold into strength last week. Why is that? It's simple. We hit resistance last week, last seen back in December, and then again in January. And sellers moved in, and all they want is their money back. So what this does is it allows us to watch the shares pull back further, and then as we see them begin to base and hold this upper band of the rising uptrend channel, we'll look to open up a position. We will add on a breakout above last week's highs. We'll add more on a breakout above the 1845 level, which marked the December 2015 highs, and we'll add more as we break through the October 15 highs at 2174. So that's the game plan with Lumber Liquidators. I think the shares are proving themselves. They are showing strength. We just want to see now a pullback, an orderly pullback, a bull flag formation, and then we'll look to open up a position. Next stock up is PANW, Palo Alto Networks. They had broken out the week. The shares broke out last week. Even though it was a down week, they did close above the upper band of this resistance level. So now what we're looking for is a continuation pullback and a retest of this lower band of, at current, support. The question is, will it hold? And if it does hold, we'll be looking to buy the shares of PANW. And we'll look to add more on strength on a breakout above this upper band of resistance at some point in time in the future. So I like the setup here. Again, we have a double bottom setup and a breakout last week. We're looking for a continuation pullback and a retest of what was prior resistance should now act as support. That will be our validation that the breakout is for real, and we will look to open up a position in the name. Then we'll add more on a breakout above the upper band of resistance. Volume last week was very, very light to the downside. So were it high like this, I would be concerned about whether or not this breakout was for real. Because if we break back down into this prior formation, this trading range, the probability of us retesting the lower band of support is about 100%, and a break below that lower band of support is highly likely. So that would be very, very poor price action. So I would not encourage anyone to buy the shares. If you see the shares close back down next week below this lower band of support, you may think you're getting a deal. You're not. You're hoping when you should fear. We have a breakout above resistance on Ultimate Oscillator. Good stuff. Stokes are hooking up. So I see no rush here to get involved with PANW, but the shares are looking very, very attractive and well off their highs too. Next stock up, Apple. I have not been bullish on Apple for a long time. When I got bearish back here, people thought I was crazy. Now I'm seeing a chart that is becoming far more constructive to the long side. So let's talk about what I'm seeing here. We have been finding resistance at, let's call it $90 per share. We've bounced off of this support level. It is very, very strong support. We had broken down below that support level and actually closed there the week of May the 9th, but the following week we gapped higher. We rallied all the way up to 101.89, pulled back, put in a higher low from the prior low seen the week of May the 9th. That's good stuff. And we flashed a bullish key reversal, one of my favorite patterns. So this is a really nice setup here. Now, what we did last week, we broke out above the upper band of resistance. So I see further upside for Apple. We don't have a breakout yet on RSI. However, we are putting in higher lows. Volume has been very, very light. If there's a caveat I have to put out there, is that volume has been very, very light. So just be aware of that. You want to see volume rise as shares begin to break out higher. We continue to see lower highs on Ultimate Oscillator. We do have a breakout on Stoke RSI. That's more of a forward-looking indicator with a higher low. Stokes are hooking up higher. So the chart of Apple is looking good. Let's take a look at a daily chart. All right, so on a daily basis, we closed down on Friday. How was volume? Light volume. We've had a nice rally since the late June lows. I wouldn't be a bit surprised to see a bit of a pullback here. If we see a nice bull flag formation setup, we'll look to buy that setup. So members, more to come on Apple. And that's it for best stock charts, folks. These are the stocks that we're watching as we proceed into the coming week. If you're not currently a member, please sign up for our 14-day free trial offer. If you want some free trading lessons, just enter your email address on the website. We'll send those out to you. We hate spam too. You'll not be spammed. Members, let's roll into the week ahead commentary. We'll begin with Market Pulse Check, where we discuss the health of the overall market. And let's begin with the SPX, the S&P 500 prior peak PE. Now, this is a good-looking chart. Looks like we're breaking out here, right? The only problem is that what this measures is the price of the overall market. And we broke out above the October 2013 highs. Here's the S&P 500 overlaid in blue. So you could see that PEs, you're seeing multiple expansion. They are rallying through prior resistance levels. In short, the S&P 500 is becoming more and more expensive.